Welcome back to part 3 of Doom and Logic, where we continue to consider who would collapse first in New Zealand, the business sector, the banks or the government. So what we've established is that there will be a lot of unemployment, and there's also going to be an inability for people to service loans the way they did before. What we need to do now is go back and take another look at the government. What I'm going to do is flip my logic over and just present some numbers for you earlier than I would have otherwise. So let's have a look here at the government revenue versus the government's outgoings and projections, and this comes from Statistics New Zealand. So what you can see is that New Zealand had a GDP of around $309 billion. And the government was also forecasting a GDP of $317 billion in 2020. Now that obviously isn't going to occur. What you can also see is the core Crown tax take, so that's what the Crown takes out of the GDP, was going to rise from $88.7 billion to $94.3 billion, and that's around 30% of GDP. Given the events around COVID-19 and all the people that are becoming unemployed, we know that there's going to be a big drop in the GDP. And what I showed in stage 1 is that it's likely to be $36 billion or more. So that lowers the government's GDP from last year's $309 billion down to $274 billion. And that's a reduction of around 12%. Now keep in mind that if the government only spent what it spent last year, $88.7 billion, then that would leave that tax take at around about 33%. So the government was forecasting a $317 billion GDP. But in fact, it's going to be quite a bit lower, say $274. On top of this, they're going to have to add in the extra welfare payments of probably around $115 billion. It could be as high as $144 billion. Now, if the government continued with its planned spend of $94.3 billion GDP, and we added $115 billion in extra welfare, that would make a total of $209.3 billion. That would be 76% of GDP. As you can tell, that would be impossible for a government to handle. So will the government be in trouble before the banks? With unemployment, the government loses 3 times. When a person becomes unemployed, the government loses taxes and they gain a beneficiary. That's less money in and more money out. When the person gets welfare and they have handouts and benefit payments, as we know, welfare payments come from the employed and productive sector. On top of this, there's GST. So when a person was employed and they bought products, they added to the GST take that the government received. But when the government is paying out a benefit to someone and those people spend the money, the GST becomes cyclic because the government is only receiving its own money back. What you can conclude from this is that as unemployment grows and grows, the hole on the boat keeps getting bigger and the boat keeps getting smaller and smaller. Back to the question, will the government be in trouble before the banks? The government will find itself with far fewer employed people to pay taxes, far more beneficiaries, salaries and wages will drop due to an excess supply of labour and people being scared of losing their jobs. Average wages may drop by 5% or more, and that means even less tax for the government. The New Zealand population will decrease by 100 to 150,000 people. All of this means that the PAYE tax take will reduce substantially and the GST tax with it. Company profits and taxable dividends will reduce as well, and property values will drop significantly, so landlords will post tax losses and not gains. On top of that, the local bodies will compete with the government for taxation or indirect taxation by way of rates. You may be wondering why I think the councils will be in trouble. Well, the fact is that most councils are already heavily indebted, and in the case of Auckland, it's nearly $22,000 per household. Now, if we take on top of that many of the bigger councils in particular were using assets as a means of getting some income, and we think about the Auckland City Council, which owns the Auckland Airport, I think that gave a $60 million dividend last year, and then we take the port authorities and all the other assets, then the council is going to find itself in a position where those assets are no longer paying them a dividend, but they need propping up and supporting themselves. So it's likely that the bigger councils are going to require many thousands of dollars more from their ratepayers per household. Lastly, we add in the infrastructure and earthquake strengthening requirements that came out after the Christchurch earthquake. And now we've got councils that have 5 to 10 years to get their house in order, and that's the year 2027. Many of the councils haven't even started spending or have spent very little on those infrastructure costs, and that is going to be a further debt burden on those councils. Only one council I know of has actually completed those works, and that's because they started doing that a lot of years ago. To complete this part of the picture, let me project out a bit further, let's say over 2 years. There's some additional effects that will occur. Firstly, exporters will make a lot more money per item, particularly primary produce. The New Zealand dollar should detach from the Australian dollar and strengthen, possibly higher than the US dollar, because our primary produce market will be a lot more valuable than mining. The useful, let's call them viable companies, will become more profitable to operate, and they will move to become leaner to operate. That means they'll buy some systems, better plant and equipment, and they'll effectively hire less staff. The appetite for globalisation is already diminished, and a lot of companies are talking about cutting the supply chains, particularly of China. So the supply chains will revert to domicile in New Zealand and Australia, moving away from China. And this will affect employment opportunities positively, but that won't occur for nearly 2 years. And I want you to also note that tourism, construction and property values will not recover immediately. In fact, they'll stay down for a number of years. So most companies that were in the share market pre-COVID-19 will not do well, but new enterprises probably will. With all this going on, how will the government respond? Well, last year New Zealand's GDP was $309 billion, and we know that the government is committing to spending an extra $52 billion so far. This is equal to 17% of last year's GDP. We also note the government already owed $58 billion US dollars, which is 82 billion New Zealand dollars. Therefore, the government will owe $134 billion, or 43% of 1 year's annual GDP. It's obvious because of the escalated unemployment that there will be an increase in social security and welfare payments. And these will go to the 3 U's, the unemployed, the unemployable and the underemployed people. What we know is that when we had 103,000 unemployed people, the welfare payments were $28.8 billion. So, given we had 103,000 people, if we extrapolate that out to 400,000 people, we will see in addition to this $112 billion in payments. Or if there's 500,000 people, then we may see $139,000 of additional payments. And that would take welfare to 46 to 54% of our GDP, depending on how you calculated it, when it was previously 9%. My point is, how is the government going to possibly cover this cost? Remember, we established earlier that they had projected a $94.3 billion spend, and if we added to that $115 billion in welfare, then that's $209 billion, when we're only going to receive $274 billion in total, 76% of GDP. Faced with this, what do you think a responsible government would do? Would it cut the public service sector spending and the beneficiary spending down to match the original 29% of GDP that they were taking earlier? So they would need to lower spending from $89 billion to $69 billion and not the $94 billion they were projecting they would spend. We need to remember one thing, however. We live in a democracy and you never know what a government might do to satisfy the masses. So now we've got a clearer picture on what lies ahead. Now that we've got a clearer picture and we've got more information, what I'd like to do now is go on to part 4. If you care to go there, you'll find this part I call the bloody big mess. So please join me at part 4. Don't forget to subscribe to us or follow us, and make sure you take a look at Labour Ape. There's some very useful tools there for helping you to manage your own business.